Hey guys, so I have a couple minutes free. I wanted to do a video on a few things. The first thing that I wanted to talk about was risk reward. Very important part of my trading strategies. It should be an important part of everybody's trading strategies. I also want to talk about swing trading and my style of swing trading. It's might be a little different from other styles of swing trading, might be the same, but there are general ideas on trading strategies. Swing trading, momentum trading, scalp trading, long term investing. There are general ideas, but traders will go in and adjust them according to their trading style, how they will feel comfortable, and what works for them. So I'm going to go over my swing trading style, and I'm going to also explain my risk reward. Destination Maternity was and is a good example of how to swing trade and how to use risk reward to your advantage. So I alerted on the 17th of October, I alerted a few people on this trade. I said I'm going to keep a close watch on it if it is able to break $2 for the gap fill. What happens with gap fill sometimes is stock will break this open area over here and it will start to move up because there really isn't a lot of overhead resistance. The closest overhead resistance, major overhead resistance, is around the $3 mark. Some people consider this area an overhead resistance. I do, but I would keep this on watch over here. If price action does actually get up to that point, I would keep it on watch, and then if it does continue, this next area would be on watch as well. For stocks under $5, and I consider stocks under $10 in the same category, there are emotional resistance areas. That's the full dollar break, the quarter, the 50-cent mark, the 75-cent mark, and back to the full dollar. So here, even though there is a gap fill between $2 and about $3, there are the emotional resistance areas. For this trade, I'd be watching a resistance area of 225. If it breaks that, resistance area 250. If it breaks that, resistance area 275. And if it breaks that, we're looking at $3, which would be a very nice gain. So I'm using the on-demand feature in Thinkorswim right now. It was giving me a little bit of a problem pulling up all the data from October 17th before. I'm going to be moving forward a couple days so you can see how my swing trading works and what I do and how I set my stops for my swing trades. Hopefully this works, with me when I try to move up a day. Hopefully the data doesn't delay and we're sitting here staring at the waiting for data screen. So I'm going to hit play on it. We're going to be watching this chart over here, and I'm going to be waiting for the $2 break. I would have taken this trade. It was an awesome trade to take, but there were other couple trades that I was chasing and in, so I couldn't really do anything about it. Congrats to all the people who actually took this trade. It was pretty awesome. So my entry is going to be on the $2 break. It's a little risky because breaking $2, which is not an emotional resistance point, but it's also a major resistance point. You've hit two big times over here at the $2 mark. I'm still going to take a chance on it. Usually I would let it break and then let it calm down a little bit. Maybe go up to 205, 206. It should stall out and then come back down to 202. But I'm going to take a it's probably not a good idea, but I'm going to do it anyway. So my first price target would be 225. This 195 area looks like it's kind of important. So if it breaks $2, I'm going to set my stop at 195, and my first price target at 225. So I'm risking 5 cents to get a return another 20 cents, 20, 23, depending on what my entry is. That's a really good risk reward. It's not a 1-to-1. If I bought at 2 and my stop would be at 195 and my price target is 205, 1-to-1 risk reward is bad because you really have to be on point with your trades. I don't want to risk, 10 cents just to go 5 cents. If I bought at $2, I don't want to have my stop at 190 just to go to 205. So I try to keep my stops extremely tight and keep them pretty far away from my first price target, that I can get a really nice risk reward. It looks like it's getting close to the $2 break. Yes, I'm going to use market order. I advise not to do that, but for this example, I'm not going to do it because I don't really like the order entry for Thinkorswim. Let's give it a second, and it should break. Yeah, it's going to break, and then I can start fast forwarding each day until the point that I get stopped out. I'm going to change this to the 5-minute chart so I can be ready to put in my stop order. Should be breaking soon. The moment that I see it hit 201, I'm going to buy. I'm just doing it for this video. It's really not a good idea to do that, to be the first one to buy in the break, especially because the RSI is so high right now. It's, not smart. You'd really want to do it on a pullback. Waiting for the $2 break, hit $2, and great. I did not want to do it that way. That was auto send. I don't even know what price I got it at. Let's take a look. 203. I mean, that's really not too bad. I would have wanted it to get a little better price, but now I'm going to set my stop at 195. I'm going to change this to good till cancel, confirm and send. So now I have a 5-cent stop on it. I'm watching the pullback, which I knew was going to happen. It tried to break $2, struggled a little bit, and it's starting to pull back. There is a possibility that I could get stopped out because I decided to be the first one to buy over $2. It, was a great idea, and I don't advise doing so. But like I said, I have a 5-cent stop on it. I'm looking for 225. I'll take that trade. If I get stopped out, I get stopped out. The risk reward is just, it's so high that I'm totally cool with that. So now I'm going to move on to the next day. I already know that this isn't going to stop. So here's day 2. What I do at the end of every day is I will take my stop and I will adjust accordingly. What I do is, if I didn't have a stop here right now, at the end of today, I would take my stop and I would move it below the low of the candle of the prior day. I'm not going to do that because my stop's so close, so I'm not going to make any changes. As I go on, you'll be able to see what I'm talking about. So let's go to October 19th. It's the end of the day. I'm now able to move my stop up from here to the low of the last candle. Stop is going to get moved. Boom. Stop has been moved to the low of the last candle. And I'm going to continue doing that. So the next day, if it continues its uptrend to the low of this candle. Boom. The next day, I'll move it to the low of this candle. And I'm going to keep doing that as it goes in an uptrend. As long as it's making higher lows, I'm going to continue moving. If it doesn't make a higher low, and I don't know if I'm going to get that in this example, I'll show you exactly what I do. But now this day is almost over. At the end of the day, I take my stop, move it up again. When I see price action with lower lows, a combination of lower lows and lower highs, it starts to miss. This isn't so bad. This day, the candle. So this day, the candle went up. The next day, it made a higher high and a higher low, which is a bullish sign. The next day, it made a higher low, but it was kind of flat on the high. I'm okay with that as long as it doesn't start making lower lows and lower highs. This one made a higher low and a higher high. This one's continuing to do the same. So let me move forward another day. We're up to the 24th. Even though this is a red candle, it made higher highs and higher lows. The stock is now on watch, making me a little nervous, but I am going to move my stop up to 252, 250 area. And let's fast forward again. Nearing the end of the day, I'm going to do exactly the same thing. I'll move my stop to around 269. Now, at this point, I should have said it before, but I was too busy moving my stops. At this point, it hit my price target of $3. It tapped it over here. What I would do as I'm watching this on the daily chart, I knew that $3 was going to be a really tough area. I would have sold half of my position when it hit $3 and it couldn't break. So somewhere over here, or even this, I would have sold half of my position, and I would have kept my stop loss for the remaining where it was, and continue to move it if I needed to move it. Let me move up to the 26. All right, so the 26, I'm going to, at the end of the day, I'm going to move my stop over here at around 274, 275. And I don't have any more, I don't have the ability to move further up with on demand. But that's how I do my stops and my swing trading. I keep my risk reward to a good ratio. When I first start, I keep my stop very close and my first price target a lot higher. I'm looking for at least a 2-to-1 risk reward. I'm going to risk 5 cents to gain 10 cents. In this, I risked 5 to try to get up to that 225 mark, which is pretty good risk reward. As I went through each day, and when each day closed, I moved my stop up. It started here. When this day happened over here, I was able to move it to the low of the candle. When this day ended here, I was able to move it to the low of the candle. When this day moved here, I was able to move it to the low of the candle, and so on. I just kept moving it up, and kept moving it up. When it hit that, my main target, there's the $2, the 225, the 250, 275. Those were areas where I had to watch out. But my real price target was this $3 mark. When it hit over here and it struggled, that's where I would sell half. I would hold on to the rest and just, allow it to play out. I made a good amount of money. I'm totally fine with that. My stop's looking well. Whatever happens from here happens. And that's pretty much it. So if you guys have any questions about that, hopefully, I wasn't going too fast and I explained it well. But if you have any questions, hit me up, let me know, and I can, go back over this with you. Sorry it was so long. It was only a 20-minute video actually. But you know, definitely, definitely watch your risk reward and also put those stops in. If my stop hit at 195, even that day when I put it in, within minutes of me putting it in, it is what it is. Don't. It, if you want to try to chase it again, you could try to chase it again. Maybe the stop was too tight. Um, but my advice, if you can't really find a good entry after that, the stop was hit, and you see it going up day after day, analyze what you did. Maybe your stop was a little too close, but keep that 2-to-1 risk reward at least. Don't do a 1-to-1. Don't do an entry at $2, a first price target of 225, and a stop at the 175. That's a 1-to-1. I mean, really need to be on point if you're doing a 1-to-1 risk reward. It's not good. The more reward you have in a trade over risk, the way less that you have to actually be right. But there's a good chance you're gonna get stopped out. That you have to have really good entries in order to push those 3-to-1, 4-to-1 risk reward. Um, but it is what it is. If you get stopped out, move on. Don't. I really wouldn't you to chase. It didn't work out in your favor. You barely lost, anything. You can move on to the next one. Analyze those trades. Definitely do, which is something that you guys should be doing anyway. You should be going over your trades in your free time. Take a look at your winners, see what you did well with your winners. Take a look at your losers, match them up. Maybe your winners are more towards these types of stocks than other ones. Maybe the slower movers are better for you. Maybe the fast movers are better for you. But you should be going over your trades. You should be keeping a log of your trades, not just have the history in the on your phone or on the computer. Get a logbook and just log your trades, and write down notes as to why the trade went well, why it didn't go well, what you did wrong, and maybe you can go back and try to find a pattern in the next couple months. But that's it. That's all I got for you. Hopefully this video doesn't come out in crappy quality, and it doesn't blow up on me when I go to save it right now. But patience, just let me know. All right.